Hey traders, Raghee here. We're going to come back to a concept that we've discussed in the past, and that's cracking open an index, taking a look at the sector, and then taking a look at individual stocks. Now, whether you're a futures trader and you're looking at the sectors and stocks for whether or not something like the NASDAQ, which has the XLY heavily weighted within it, or whether you're looking at Amazon as part of the NASDAQ or the S&P, maybe it might be Home Depot. When we look at indices, and I'm talking specifically the S&P, the NAS, and the Dow. Not the Russell, because the Russell does not have high concentration weighting. These three do, and their largest concentration is still tech. And that includes the Dow. The Dow has the number one weighted sector in tech, S&P, and of course the NASDAQ does. But one of the sectors that's been a relative outperformer when I compare other heavily weighted sectors within the NASDAQ is the XLY, the Consumer Discretionary ETF, which is most heavily weighted with Amazon. Amazon's about 23-24% of the XLY. So this is in many ways a great proxy for Amazon. So if you don't want to trade a $3,000 stock, or you don't want to trade those pricey options, XLY is a terrific proxy for it, so keep that in mind. One of the things that I've been most interested in is, as the NASDAQ does recover, where would I want to focus my longs if it's not in the NAS itself? So let me show you what the NAS looks like. The NQ. The NQ is going to be the top of the heap for whatever I want to do related to tech. And so I can see here that in that SoftBank breakdown and then just the chop we've seen since, the NAS put in a nice minor low. It's moving higher. But one of the things that I think has been even more resilient is the XLY. And then within the XLY, we have quite a few what we call double green markets. So if you're looking for relative outperformance within the NASDAQ, look to the XLY and look to these four names within it that are still double green. McDonald's, Nike, Starbucks, Target. Not names that we would associate with the NASDAQ, but it's NASDAQ, XLY, and then these stocks. And I love cracking open the indices in this way. So let me also show you all the XLC. All right, so what I do is I have these ready-made sector ETFs. And then when I do bring them up, which I bring them up on a very regular basis, what I'll do is I'll just check, and you want to do this about once a week, check the current holdings, the order of the holdings. In XLC, notice how much harder the XLC was hit by the recent weakness. Look how much harder it was hit. Look at the way in which we have so many more red grab candles. And that's because of Facebook and Google. Your fourth heaviest weighted name right now is Activision, followed by CHTR. Then comes Netflix. Then we have Comcast. So what you'll notice is these are usually not a brand new set of names, but rather just reshuffling, a reshuffling of the names that you're probably watching. And then down towards the bottom of the list, once you get past about the 6th or 7th spot on the list, you'll start to notice that, you might get a name or two that kind of rotate around and say the 8th to 12th spot. But for the most part, this is what you're going to see. So, all right, the 6th spot was, let's see, Facebook, Google, Activision, Charter, Netflix. There we go. Clearly, I am typing something wrong. But anyways, so the thing to remember here is that when we have these names within the XLC, compare it to the XLY, we do have some names that look pretty good. XLC had a whole lot more weakness. You'll see here with all the red grab candles. But there are some names that from a relative performance standpoint look a whole lot better. All right, so we have AT&T and then Disney. All right, AT&T and Disney. That rounds out the top of our list. Notice we've got Charter, Comcast, and Verizon as the three names. So if I want to take advantage of a long position in XLC, I might on a break of this minor high here, or even today we had a break of the minor minor low at the more aggressive level, which is the high of the second candle. But if I want to be taking advantage of the move higher, why not take advantage of stocks that are already wanting to go and just need the broader average off its back? This is relative outperformance. And then we can do this to the Qs itself. Now remember, we did something similar in the Dow yesterday. Today we're doing it in the NASDAQ, and we'll dive into these names, those names that are pertinent to the NASDAQ, as it seems that NASDAQ was one of our relative outperformers today. We'll go ahead and deep dive in the premium video. Hope this helps. And again, same idea of what we talked about yesterday, only instead of looking at Dow, copper, transports, and industrials, we're taking a look at the NASDAQ, we're taking a look at the discretionary and the communications sector. All right, and remember, we've got the XLK, also part of the NAS, which the two heavily weighted stocks there are Microsoft and Apple. All right, I'll see you in the next update.